Hey everybody, Eric Hudson here out of Keller Williams in Las Vegas. And I just wanted to go over some really quick things with one of my lenders out there, Dan the Man French. So stand by for some really great stuff that's going on today. Hey everybody, Eric Hudson here out in lovely Las Vegas. Hey, we are still in the middle of all of this mess, and I wanted to bring on a lender to talk about what's going on today.
So, hey guys, how you doing? This is Dan French, Guaranteed Rate, and there's a lot of changes in the lending world, as everybody knows. We have a lot of stuff going on with risk threshold. There's a lot of stuff going on with changes to down payment assistance, um, minimum requirements for credit scores, and a lot of it is really due, obviously, to the coronavirus and what's going on. We also have issues with non-QM or non-qualified mortgages, where if you're somebody out there that needs help because you can't qualify with the traditional mortgage, then those doors are closing. And every bank that we have, a lot of them are closing their doors. Bank statement programs, asset inclusion for national, some of the outside of the box type deals that we used to be able to get done. A lot of these banks don't have the lender on the other side or just the investors to buy these notes. So a lot of the non-qualified mortgages, which is the non-traditional mortgages, a lot of those are going away right now.
Okay.
No stated income. So with the traditional side of the loans that we see internally, us as a company, we've made changes internally. That doesn't mean FHA, VA, and conventionals made changes, but let me give you why this is happening. So with all these loans that's going on, there's not a lot of liquidity for the investors on the other side to really take on the bulk of loans that's going on and stay afloat. So with Ginnie Mae, which is FHA or VA loans,
Okay.
a lot of these you have a lot of the people coming in to get these loans. What's happening is right away they're asking for that 3-month extension, and that's because of the coronavirus. Well, they don't. They're not offering that. They're not going to honor that. So what does that mean? It just means that what they're doing now is they're taking on certain loans, but they have to be a little bit higher qualified. So what we're looking at for FHA and VA loans, we can still do a loan down to 620, but they're looking at now having at least 2 months reserves. 620 to 639, that's the credit rating for FHA or VA. They want you to have 2 months reserves. No gifts are allowed, or down payment assistance are allowed with the credit score that low, obviously with the down payment assistance. So we're looking at no gifts. We're looking at now having reserves. That's monthly payments that you need to have extra money in the bank, so that way you can pay your mortgage. The traditional FICO right now for an FHA or VA loan has jumped up to 680, and that's, if you look at like Wells Fargo and some of these other banks, they've done that too. I don't want to pitch that name, but I mean, there's some of these bigger banks that are out there that are starting at 680 or higher, and we're one of the few banks that are still doing below the 680 credit score because we have set margins. Obviously, we have pretty good margins here with the investors we have, and then also we're making adjustments as we go. So that way, when we do deliver this to Ginnie Mae, that it's not just going to be the traditional. Now it has to have what's called overlays on top of these FHA and VA loans. The maximum debt to income ratio now that we're seeing is 45. Now, if you have the 2 months reserves, though, it'll jump up to 50%. Now, how does that change between an FHA loan from today's world versus, let's say, you go back a month ago? Well, on FHA loans, we can go up to 57% debt to income ratio. That means the highest we can get up to. So now we've lost some of the purchasing power if you're out there as a consumer trying to buy a home. So that's the changes we've done internally. And I really feel that a lot of investors are going to start to go across the board with this, and they're going to start to see what's happening. We're going to start to see what's happening with a lot of these investors that stick around. Some of them, they might not be able to stick around. And that's what we're trying to do. We're trying to obviously make these changes so we don't have any issues going through the process of getting these loans done. We do have a lot of hold up when it comes to trying to work with getting things to the finish line right now, just because of the changes that's going on internally while we're in the process of getting a loan closed. So a lot of this stuff is really starting to jam pack a lot of the loans that we already have in process. Additional guidelines, obviously, manufactured, it's a 680 credit score. So you're starting to see that a lot of this stuff is going to be 680, which usually that's where you're not going to have any additional extra overlays. So if you have a 680 or higher and you're trying to do an FHA loan, you're perfectly fine. It's back to the old way. But if you don't, you need to have extra things coming to the table. Jumbo guidelines, we used to be able to go down to 680 or higher. A jumbo loan is anything that exceeds 510,000. And so requirements now is 750 or higher. There's no interest only, no cash out transactions at this time. So we're going through a lot of processes here. No non-owner occupied either. You can't come on and just try to help the situation to get into a loan on a jumbo finance. Bond loans are still there. Matter of fact, bond loans, which is the down payment assistance, we are probably the last state. California, it was us. California's backed out. Most of the states now do not do any down payment assistance programs. We're still one of the programs that, or one of the banks that do it. We need to have 4 months reserves. The minimum FICO score now is a 680, and it's for obviously government, conventional, and government loans. Also, the max debt to income ratio is 43, and that's very strict. We used to be able to go up to 50. Now, why is this happening? Like I said, either we make adjustments as a bank to stay in business, to offer better paper or offer better options to these investors, so they know that there's not going to be any issues going through with all these people being laid off in the process that we're going through. This doesn't mean it's going to be this way forever, but it might be this way for the next 90 to 120 days until this thing kind of settles itself out. So that's some of the biggest changes that we've seen. A lot of these banks don't have the liquidity, like I said. And so what they're doing is they're just trying to stay afloat. So they're shutting their doors. They're not taking on as high as, or the bulk of business that they were taking on. Conventional loans, we're seeing higher rates. And I think also that's the reason why is because conventional is trying to catch up. Fannie Mae, Freddie Mac's trying to catch up, and they're wanting to maybe stop the flow as much as coming in at the time. And I think they're not coming out and saying that, but that's why I see, or this is what I think is happening, is they're naturally adjusting the loan level pricing adjustments on these rates to push a little bit more people out of the market, so that way they can kind of catch up and kind of get a breath here at this. So for the most part, we're going more restrictive. We're still in business. We're still doing fine. A lot of the products that were offered are no longer offered, but for the traditional loans, they're still there.
Okay. So the traditional loans are still there. So conventional, FHA, VA, USDA, things
all that
are still
yeah.
there. The only ones you have to really worry about are the more exotic products. So
more exotic products, right? And also like the down payment assistance, right? We haven't heard that this is going to go away, but it could go away.
Okay.
And I'm not saying yet, but it could.
Now, one of the questions someone may ask, Hope Brings You Home, how is that working right now?
So I've heard that they've halted that for whatever reason. I know that there was a little bit of money left over, but what I was hearing, it was getting close to getting to the end of it. And I don't know if they're still honoring it at this time. It doesn't mean that they won't honor it in the future. I've heard that they were just going to put it on hold as far as a company standpoint and just kind of see what's happening. I haven't seen anybody come through and get one of those done with all the process of the last 2 weeks happening. So I think with these government, with the bond program and with the down payment assistance, we're really starting to see some pushback, and that maybe we won't have these programs going forward for the next 2 to 3, maybe 4 months.
Okay. And what about those who, let's say, qualified for a down payment assistance program like Hope Brings You Home, and some Nevada rural programs and some of those others, and let's say they were qualified, received their approval, and they're still out shopping for houses? What's happening with them?
If they reserve the funds, I'm sure they're going to honor it, so long as it's not just blocked where it says they're not going to do them any further. But I'm sure if you've gotten approved for it, you're still fine. Mm-hmm. But I think what we're looking at is a lot of these people have lost their jobs. So if you're laid off, if you're in furlough or something's going on, we can no longer give you a loan. And what's unfortunate about it is we don't foresee as a banking institution when they're going to come back to work. And it's just for anybody out there that's not employed at this time. So unfortunately, we have to adverse the file because there's no commitment, even though the president has said, hey, we're coming back on the 31st of April, that everybody's going to go back to work. There's nothing, written in stone with that. So we don't know. So if there's somebody that's in a file right now and all of a sudden we get notification that they're no longer working, unfortunately, we're going to have to back them out and adverse their file. And if that's the case, then we're going to have to start that file over.
Okay. Now, one of the things I want to talk about are the appraisals. There's been some huge changes in appraisals in the last couple of weeks. One of the big things they've created is the drive-by appraisal. Can you talk about that a little bit?
Well, the drive-by appraisals, it's kind of been around for a while. The drive-by appraisal has been where it's not been the most efficient way, but obviously people want it. There's certain programs that would offer it. And so we're starting to see where they're just going through the process a lot smoother, a lot quicker on some of these appraisals. Like I said, in some cases, they don't even go out there. We've had Fannie Mae, Freddie Mac options where they don't even go out there. So the drive-by appraisal is just a more streamlined process to getting an appraisal done. And we're starting to see that come out more.
Okay. From what I'm understanding, just want your opinion on this, that a lot of appraisers are not wanting to go into the home. So that's actually starting to become.
Yeah, that's basically why it was. So we've had that before. And when they do it before, they did go in the home. So there was a streamline or they always had that terminology, a drive-by appraisal or just a real quick appraisal process. They're doing the same thing again. And, like I said, what I've bypassed with is the fact that, FHA and VA, if you have a streamline, then most of the time you don't have to go into the house anyways. But they're doing this just for the time being. So that way everybody doesn't have to have a contact. They don't have to go in the house. They're really just going to take whatever area surroundings that's sold in the area and really just kind of maybe just go through the process of maybe just checking the surrounding areas, looking at the home the best that they can without actually going in and making contact with somebody inside.
Okay. And how does this affect people? Let's say, I have a nice home. I've done a lot of upgrades to it, and I wanted those upgrades counted. I know you're not an appraiser, but how does this affect that?
Well, it's going to affect it a little bit. I don't think it's going to overwhelmingly affect it because you have to realize that a lot of it is what's sold in the area in a certain time period. It's not about really what you did to the house. Now that does play a considering factor, so don't discredit that. But what I'm saying is that's going to be a smaller part of what they're really going to take the big picture of what your value is for your home. There is certain things like you might have a strip view or a mountain view or maybe a pool or something that may add just a little bit more value, and that might hurt you a little bit because they're not considering that because they're not going through the process. They're not going in the house and seeing that. They're just kind of looking around. So somebody that has those types of things, that might hurt their value a little bit, but I don't think it's going to be where we're going to see a huge drop off and there's going to be a huge difference because they don't go inside the home, because a lot of the details and a lot of the work is really done on what's the surrounding area, what's sold in the area, and in what time period. And structural things are important, but they're not going to be the final deciding factor when it comes to the overall value of your house.
Okay. So we got that part because I've also noticed over the last couple of weeks, like title has become more strict with the escrows, right. People coming in.
Right.
So just trying to limit that as much as possible. And going forward, do you see any big changes, even after we come out of this crisis, any big changes in the way people are going to start treating the transaction?
I do, because we're actually making that change now. We're 100% online, where you had to sign before. We used to have where it was called flash close, where you'd have to sign the deed, and there would be certain documents that very few where you'd have to actually go to the title company, sign with a notarized rep, and then that way it would be legit. We've now made it where you can sign anywhere at any time online, and the way that they do it is now they're doing it the same way we're doing it, where they're Skyping or they're Zooming, and they have a notary right there going through the process. As these things are getting signed, we're actually seeing it face to face. So this is going to be a new wave, I think, of things to happen in the future. I do.
And I mean, as tragic as what's going on now, I actually see more efficiencies in the future based on, people adopting new technologies. So you kind of pulled some people out where they were resistant. Now there's a good possibility going forward. What do you think of that?
I think it's right, but I also think that you have a lot of people that are not tech savvy, and I also think there's a lot of people just look. I have stuff all the time where I ask people to upload documents right to the file that they have, download something and send it to me. And I'm not saying that a lot of people don't know how to do it, but there's still quite a few people that are struggling with the idea of having conference. They don't like the idea of being maybe on a camera or whatever it is when I'm doing an application. Not saying that they have to, but I'm just saying some people are going to be really liking this idea. I think it's going to move that direction as you start the younger generations, how tech savvy they are. This is what's going to happen. It's going to be the wave of the new future. But at this time, I think some people are going to struggle with it. I think majority of people are going to be okay with it. But like I said, there's still people out there that really don't understand the whole process of uploading and how the process works on trying to get it from A to Z when you're using technology.
Okay. I'm going to start developing some products to like teach those folks, or you guys working on that?
Well, we already have what's called it's really a tutorial, and every time we send something out, it really takes you a step by step for the client about do this, do this, do this. So there's always going to be every company I've worked at really has the old, the breakdown. I think it's just the unknown. People are just if you don't know how to do something, sometimes you get scared of it. If it's not something where you grew up with it in your hand, like my son has with all the technology stuff he has, you might have to try to figure it out and be out of your comfort zone. And I think that's all it is. I don't think people won't be able to figure it out. I just think it's a new way of doing something, and you're going to have to figure that out.
Okay. Well, good. Okay. Well, Dan, it's been great having you on
Yeah,
with me today. And
always.
we're all social distancing ourselves right now in the new.
This is
Uh,
what I got right here. You see that?
yeah.
Right next to me. And I also got some Lysol wipes right here. So we're good to go.
Okay. Good. Good. Well, it was a pleasure having you on today. And for everyone
Absolutely.
else, subscribe, like, give us a thumbs up.
Yeah.
And if you need anything, reach out to myself or reach out to Dan. And what's that website again?
My website's I put it at vegasloanguru.com. It's real simple.
Okay, vegasloanguru.com.
All
Got it
right.
all taken care of. And hey, everybody, need anything, just reach out to us.
Thanks, Eric.
Bye.
Talk to you soon.